Amazing developments again in financial markets. We had all-time highs before summer break, and now, as of last week, again. It's fall in Germany. The DAX tried to surpass 19,000 last week, and we got quite good performance even on a global basis. We have three segments. We have the US with 20%, and joining the 20% plus league is, for example, India and Taiwan. In the middle, there's Germany and UK, 12 to 13%, and China and Korea on the negative side with -3 and 5% year to date. So for global portfolio managers, it hasn't been easy to outperform this year, and it's very interesting to have an outlook into 2025 this time. Traditionally, September is the best time. Most strategists have just revised upwards their year-end targets for 24. So it's the most interesting part to develop an outlook for 25. Trying to assess the economic situation for 2025, it's an extremely differentiated outlook out of the current situation globally. Whereas the US is holding up on a 2% growth path, also according to the latest Fed projections for the next 2 years, it looks like 2% growth. Looking here in Europe today, we had the PMIs for Germany and France coming out, very much on the disappointing side. We still have a manufacturing crisis here in continental Europe, and even the services sector is getting under pressure. PMIs are hovering along the 0% growth expectation line. Looking at Asia, it also looks quite good. If you look at countries like India, India is shooting the lights out with PMIs of 60 and higher, so quite good economic expectations. China, on the other side, still has a real estate crisis. Consumers are in a bad mood. We still wait for an economic recovery in China, and the Chinese government is trying to have a more accommodative policy. If you look at central banks, the Fed started last week lowering rates significantly. We had a 0.5% move from the Fed. Earlier, the European Central Bank actually started with a 25 basis point move. So the central banks globally are actually going or entering a path for more accommodative monetary policy. That looks more like a Goldilocks scenario for the US. Inflation has come down to 2% path for the US, but also here in Germany, a 1.9% CPI growth is on a positive surprise side. So we can actually expect lower rates into next year. We expect the central banks to be more accommodative. In summary, critical growth path for Germany, only a 0% growth for Germany and continental Europe, 2% growth path for the US, and a very differentiated picture in Asia with India and Taiwan on the good side and China with question marks. Overall, Goldilocks is positive. So what does it mean for the investment strategy into 2025? The political situation is mixed. Kamala Harris versus Trump. If Kamala Harris wins in the US, there's going to be very little impulse for financial markets, rather tax hikes. In Germany, the right-wing Alternative for Germany had significant gains in parts of the country over the past 3 weeks. So what do we make out of that? Well, in terms of a Goldilocks scenario in the US, there is a whole set of opportunities again. There's opportunity for small caps in the US. There's opportunity for the broader market below the S&P 500 in the US. And there's, again, opportunities for growth stocks and everything that profits from falling interest rates. Even on a global basis, we're facing, I would rather say, a big set of opportunities. If you look at China, a recovery from a low level is possible. If you look in Germany, we have recessionary types development, and in recessions or recession-like scenarios, it's good to have a cyclical exposure or build cyclical exposures in continental European and German stocks. In Asia, there is also lots of opportunity in the Asian growth markets, in India and Taiwan, and the same is true for everything that has to do with technology and with artificial intelligence. So 2025, although on a high level, starting from a high level now in September 24, still looks like there's a lot of opportunities and more chances that the bull wins and we get new, fresh all-time highs into spring next year.